Hey, what's up, everyone? Let me know if you can hear me. Sponsored by Starlink, I wish. Let's see if this live stream is gonna hold up. It's gonna hold up. It's Sunday. What is it? Sunday the 17th. I'll be going over a few different topics today. The main topic being trading into all-time highs. Obviously, on Thursday, we saw a decent tumble in the markets, but as of most recently, I think trading into all-time highs is a very, very important topic to be discussed, and I'll be breaking down what I look for and how I go about trading all-time highs, the general thought process around all-time highs, and we'll do a little update here and a little breakdown of what's going on in terms of the week, right? So like a breakdown in terms of the week, my anticipation for the week ahead. I'm actually not going to be trading Monday. I got some important things to do, more important than trading on Monday in the morning. So I'm gonna be busy from like 7 a.m. until like the afternoon. So we'll still break down a plan in terms of what the anticipated movement is for this week and my thought process for the coming week. And we'll see how kind of that transpires. I know a lot of people are looking at this, especially from Friday's action, screaming, "Oh, bear market, everything's going to fall, like we're doomed, we're dead." It was pretty obvious from last week that we were going to turn over and look for the sell side, and I'll explain why, especially in the understanding of how to trade markets into all-time highs. But first, I want to break down. I know Black Friday is coming up, so here at Trade Pro Academy, leading into the end of November, we've got a 60% off deal. What I'm going to do is you guys can check out the link in our Discord number 1 for that deal, that Black Friday coupon. 60% off, which puts it about at like $87 for the first month at Trade Pro Academy. Otherwise, let me figure out how to actually... let's see here. I don't know how to put this in. So what I'm gonna do, I don't even know what I'm gonna do. Just give me a second here. What we're doing today, right? We'll go through a breakdown of trading into all-time highs naturally. We'll also talk about what's going on this week, but also, right? This Wednesday, I'm going to be doing a breakdown of a live stream for our members and traders. I like to break down. It might be like a 2-part series to break down all of my thoughts in terms of my A+ setups, how to trade all my A+ setups and everything in between. So that's going to start this Wednesday, and into December, what's going to happen is we're going to be breaking down a full mentorship at Trade Pro Academy. So through the month of December, I think like 2-ish weeks or something, I'm going to break down a full membership that's a part of our Black Friday deal, going from A to Z in terms of trading, everything from getting started to getting funded even. So that's one of the big factors here that's included in our Black Friday promo. And it all pretty much starts today, right? So here, I'll paste a link, and then we can just get started. So the first thing that I look at, even before we start looking at these all-time highs, right, we'll look at trading all-time highs in just a bit. But first, I want to kind of give a breakdown of what's going on for the week and kind of where I anticipate this week heading. We had a lot of downside momentum on Friday and on Thursday that I'm sure a lot of people were like, "Oh, this is the start of something drastic, blah, blah, blah." Well, let's take it with a grain of salt, realistically. I understand that it was a pretty strong sell-off, but we also had a massive low-volume rally after the election. So we can even a few things out and then potentially start running for the upside. And I'm not like going super bearish this week, right? Last week I was bearish at the highs. We had a decent pullback. I know it's not a lot, but people are going to be like, "Oh, there's another 15, 20% happening now." Okay, whatever. If it happens, it happens. But there are key criteria that we want to establish to understand that if X happens, especially on closes, which is a very important factor, if we get closes in certain sessions on the rally, then I don't think that we necessarily can be flipping to bearish. So I'll explain that. But first and foremost, I want to start off, I'm going into the week cautious, right? Cautious in this market per se. Not necessarily just super exaggerated trying to short everything, but I think if if Monday and like Tuesday aren't big sell days, we've probably hit a bottom. So first things first, let's take a look at some of the news that might happen. This is Forex Factory. It's very easy, just type it into Google, see what's going on. And mainly I just look at the US data, so like I can filter this even. If I filter it just to US and like Euro, hell yeah, Euro pours. So I filter it just to US and Euro. We can look at like the red calendars mainly. Unemployment claims on Thursday out of the US. Everything else out of the US is like, it's pretty low impact into about Thursday and Friday. That's about it. Everything else is just like, so it's not a very heavy news-driven week, realistically. We're still coming into the latter portion of November. Last week we had OPEX. Last week we had a bunch of different factors that were coming through. So now that we've let this thing settle down, I think that we can move a little better in these markets in terms of momentum and not as choppy, because last week was like super, super choppy. So some of the factors that I do want to talk about, let's see where this week can kind of go and head from here. So one of the big things that I'll be looking for, we'll look at the S&P and the NASDAQ together in a cumulative fashion. But one of the main things that I do look at is going to be, to start things off, like a weekly individual profile. So what I mean is every individual week is given its own profile, and from there we can kind of decipher what was going on and get a better understanding of kind of the movement and the story of this market. So not only that, for these individual weekly profiles, like this was obviously last week, it's closed, and then the week prior, so on and so forth. Like the week prior, the election week, we obviously had this like massive rally, right? It was from, let's say, around 20,000 all the way up to 21, almost 300. You're getting 1,000 and like 300-ish point move, not last week, but the prior week. And this week from the highs about 21,300-ish all the way down to about 2,400. So nearly is about 900 point movement to the downside after, let's say, like 1,250 move to the upside the week before that. So very large swings over the last 2 weeks. And like one of the main things that I think traders should notice, especially on this NASDAQ, is that the election week that created this profile left behind like a very low volume trail, right? This low volume trail realistically is a very easy passable opportunity for any real seller to come into this market and say, okay, let's just clean this up, and then we can decide from where to go from here. So if I'm looking at this, we have like pretty large auction profiles here. How do I do that again? See, I don't really draw stuff on here, but like, okay, look, we have this like pretty large profile, something like here, and then this like other massive profile over here. These are like two very large balances. The main point that I'm concerned with overall is the extension top of the balance that we just got into, right? Why is that? How do I delete this? Why is that? Because this is a start of the acceptance into a prior balance where you can see multiple weeks have created a lot of balance into that area. So for me, if I'm looking at this, right, I'm looking at both the larger profile as well as the individual weekly sessions to give me more of an understanding of what's going on. Because if I look at this, you can see this like super, super low volume area from last week starts somewhere around here, right? We can say around 360, 370, realistically, right? This is kind of the ledge of a balance region. So from there, right, this is on Friday my anticipated area where I say, you know what, if we're going to trade down into that area, I think it's going to be worth a little bit of a long to see if we can go and pop back into that 520. Now, this region is going to be an expected support zone, right, realistically, before prices start tumbling down too much and accepting into this larger balance. I would say if we do experience some kind of downside, it's going to be down into that area, and then we're going to start to see some kind of buy press try to shape out. I'm not saying that this has to be a bottom, but it would be in the best interest of all of that buying that transpired, because again, this is the area where the buying transpired going into the election that created all this low volume. So you can see, obviously, last week that we just closed, we have this huge low volume area right now. All right, we got this huge low volume area over here. So realistically, it shouldn't be that difficult of a task if we start accepting auctions higher, to go and clean that up, right? To clean it up means that we go all the way back here, and then if there's any real selling, it starts where the volume balance starts off. So realistically, if I'm going to be bullish this week, I really want to see NASDAQ above that like 520 marker. Now, 520 is a good starting point. If we start moving above like 600-ish, 620, I think that really, really opens things up. So like if I'm looking at the long side here on NASDAQ, if we start bidding well above 520, like let's say 560, 580 plus, I'm going to be buying pullbacks into 520, targeting about 620, and then we can see what happens from there. I'm also going to be a buyer at that 360 area, 370 here on NASDAQ, and then get more bearish, continuously get more bearish as we start crossing under 330. Right? So my thought process is that it's a very extended low volume drop that happened very, very quickly, where better sellers might be met at higher prices if this thing is actually going to hold out. But we're in a pretty strong momentum move to the upside. So realistically, I'm looking at this as an opportunity to find some kind of buying, ideally above 520 or around that 370, 360 here on the NASDAQ. Like this is shaping up realistically to be a very easy cleanup in terms of auction volume to the upside through this area. And then, right, later on, you get to 2100, 2110 area, or 21, sorry, what is that? 21, 2100, 2100, like somewhere around that area. And then we can say, okay, potentially there's an opportunity for a lower high to be created here. Because as you can see, right, we have an expanded balance into the highs of the prior week. This is like a very elongated P-shaped volume profile. You can see like the weekly profile obviously reflects this, the same freaking thing. But anyways, it's a very elongated P-shaped profile with like the main balance somewhere around this area, right? That's the main balance. Now, you've been extended with this like huge downward drop with low volume. This low volume, if it's easily pass-throughable, which would be above this, oops, that's the completely wrong thing. Above this, no, that's wrong too. Above this area somewhere, right? When we pass through that, I think that it's going to be a fairly easy cleanup. And then from this area, if there's going to be any kind of sell pressure, it's going to be much higher towards that 21,100. That's how I'm looking at this. So, like, yeah, I am looking for some of the longs. As long as we're above, like, as long as we hold 360, 320 on the NASDAQ, I think that it's a shot, right? Because if I'm looking at these reversals, from that perspective, they're going to offer the best risk to reward. Because if we start moving into this low volume territory from last week, it's a fairly easy cleanup, right? Like it's an immensely easy cleanup. It's very, very low volume, and that happens if we start moving more aggressively above that 520 area. So that's kind of where I'm at with NASDAQ to start the week off. If I look at like the individual day profile, it gives me a very same thing pretty much, right? I can get maybe a little more information given by day by day kind of breakdown and thought process. Like one of the things that I'm going to be talking about with the A+ setups that's coming out on Wednesday is going to be based on the understanding of how these auctions open and close around different balances. It's a very important factor, as well as the individual shapes, the level of volume, right, that's created in the individual profile, where that volume is created. These are all very important factors to give us a better understanding of how price is expected to move realistically. Because if I look at this thing, and I try to do something about it, this is sometimes kind of sucks. Can't find some of this shit. You gotta be kidding me. I literally just had it. Okay, so if you look at this, right, you have this like big balance that was created, right, not too long ago around these areas here, right? 260-ish, 250-ish, blah, blah, blah. So realistically, what happens last Sunday, right, that you might not be able to see on the screen here, let me just move this a little. Let's see. Like what happens last Sunday, you can see up here, right? You get this expansion above this massive balance that's been created, right? Several weeks. You can see where the volume drops off in prior days, where the heaviness of volume, so on and so forth. So this has to do with trading into all-time highs. I'll kind of split that apart from the analysis that we're doing right now. But realistically, last Sunday, what happens is we get this expansion higher. We get this expansion to all-time highs and into a new balance to the upside. What's being left behind are these like low volume drop offs where the balance starts around like 250-ish here on NASDAQ from the prior sessions, right? Looking at this, realistically, I'm looking at it thinking, okay, well, honestly, as long as like 250, 240 area holds support structure, that's what creates the expansion into a move higher. The second we start losing that and we start closing back within a balance, this is what I call at least like a failed acceptance of an auction. So the failed acceptance of an auction last Sunday led me and the team to look at this from the bearish perspective pretty much all week, trying to sell from 240, 250 when we had the chance. There were obviously buy opportunities. I did buy it a few times. But the overall thought process was sell rallies into this because we failed to make a break outside of the auctions, right, on closes and reopens of sessions, and now we're within it. So, okay, we play the short side pretty much the entirety of the week, and it's keep shorting until you get a close above 260 area. That didn't happen. If anything, on Thursday, we get a close down even under 21,000, right? Again, that's bearish. No matter how you look at it, I'm looking to continuously sell rallies into auctions lower. Now, this is one of the interesting factors here. If I'm looking at the current, let me erase this. If I'm looking at the currency of what's going on right now and where we are in terms of these larger auctions, we looked at it from the perspective of what's it called? Of the weekly profile. Now we can shed some light on it in terms of the individual day profile. The individual day profile is pretty split. Is very similarly split, I should say, to the weekly profile, right? So what I'm talking about here is me trying to find the same thing. What I'm talking about here is you have very, very thin volume pretty much above this region, around this like 520-ish area, the top of this immediate balance. So what that represents realistically is a stalling point that we've for now closed under, where that downside would want to continue momentum. Now, if you look at this individual day session, it looks like more of like a B-shaped profile, like a lowercase b. Lowercase B-shaped profiles, what happens is that you get this like larger move to the downside on like decent selling. Right, it's very just complete selling on the way down. And then at a certain point, what happens is prices create a balance into a low. That balance into a low is a combination of people getting trapped on the short and buying, deeming it fair value price for buy side to get in, which stalls out the sell price. Because think of it this way, if all that accumulation happened at a low and the majority was sell side accumulation, well, prices would have just continued lower. So what you're seeing is the beginning of a fight for the buy side, right, where they're accumulating this balance into lower. There's heavy volume. So generally these B-shaped profiles do rally right towards the midpoint of the B, which is like that 520 area. For me, I'm going to be targeting in and around 620 because of the start of this minor auction. Anything above 620, I think that we have a lot of conviction that the upside's probably going to open up to start the week. But we can call bottoms for me once we start closing above that 610, 620 area on the NASDAQ. That's about it. Otherwise, I'm looking at this from the perspective that I do like the bull side for a rally where maybe sellers are hiding at higher prices this week. So above 520 is bullish for me. At 370, 360, I'm going to take my shot on the bull side and see if we can get that anticipated move to the upside swing. So with NASDAQ, that's generally what I'll be looking at this week. And oh, jeez. And the S&P is a very similar character, right? The S&P actually showed a little more weakness in terms of how this market shaped up. You can see from Friday, right, I'm still holding some swings for the long side on the S&P. Yeah, I didn't really trade the downside. I didn't. I traded the downside early in the week, but I didn't do it on Friday because I'll tell you why. Because I was a little distracted. So I missed a lot of that downside to begin things. Now, S&P. S&P very, very cleanly made a new all-time high. This is why I think a very big topic of conversation for today's session is going to be trading into all-time highs and how I approach it and how I think is a very effective way to trade into all-time highs. So if I'm looking at this and the S&P here, the S&P after the election made a very, very progressive move into an all-time high. So we had this major balance that was established into the prior all-time high. And one thing that happens into all-time highs, right, this is the weekly profile for the S&P. One of the best things that would happen into an all-time high for equity markets is the factor of creating a new balance into an all-time high, right? That is the best case scenario for an all-time high, to create like kind of like a bull flag type scenario, to create a move that like swings higher and then just like holds a balance and creates a new balance into that all-time high. What that does is that welcomes new market participants, new buyers at higher prices, and tells them, okay, well, look at this. We've made a new all-time high. We're holding into this area, right? We're not moving back down into prior auctions. We're not moving back down into major supports. And that tells you that the sell side pressure into this all-time high is like nothing. It's air. But that's if the all-time high creates a balance into that area. So that's why I'm looking at it. I'm like, okay, well, realistically, there are some areas when we were into that all-time high that seem to be buying opportunities, that are buyable opportunities, right? Some of those areas from the prior week, not this past week, right, included this region over here, right? This is around 59.90 area and a bit below. Around that 59.90 area is the bottom band of the immediate balance from 2 weeks ago, as well as over here, right, the top of this larger 200-day distribution, as well as last week's cutoff before this low volume area of this low auction starts. So you got these, like, I guess, like two main areas, and you got like other areas in between, right? When you're trading into all-time highs, I'm looking at these weekly profiles to get a better understanding of where the heaviness and weakness of volume is. But if I'm looking at this from the balance perspective, generally the main balance that is sitting is like between like 510ish, 515, all the way down to about like like 5.9, 10ish, 5.9, 15, all the way down to about like 5.8, like 30ish. So a pretty extensive, nearly 100-point balance here on the S&P. That's the only major balance that's kind of sitting there in the past. Otherwise, what we have is like a momentum move to the upside swing and like new volume and new balance being created into this area. So if I'm looking at this, it was very dependent on this like 59.90 area to hold out that support structure, as well as, remember, like the NASDAQ. When we rallied above a key area here, where you have a single print, you have the heaviness of volume drop off, and this area happens to be around 60.35ish, 60.32. When we rally above that area last week, especially on Sunday, and we fail to close above that area, we just start closing below it. That's what triggers the sell side pressure. And yeah, of course, we can still hold the balance that's trading from the prior week into that 5.990, but we end up toppling over right into the end of the week. We break 5.990, we close below it, and we create this like long elongated P-shaped profile. Now, just like the NASDAQ, the S&P is in a very sticky situation right now, because what we've done is we've closed within a major balance to the downside. It's a very, very bearish scenario. It's a very bearish scenario. We're selling rallies from 5, 9, 10 to 15, right around that area. I don't have the exact level, but somewhere within there, right? Let's say 12, the midpoint, 12 to 13, the midpoint somewhere. That is the logical step right now to start selling rallies into this market to complete the prophecy of the acceptance into a balance to the downside. When you accept a balance into the downside from the upside, what generally happens is that you have that continuation that follows through. So like, if you want to be on side of things this week, right, you want to start on the sell side. You want to be on the sell side until you start breaking the 5.9, let's say 15, whatever. Let's say you break the 5.915. That is going to be your quantification and qualification to see the bull side actually open up, especially on a close of a session, because what happens is you have aggressive buying, right? Underlying buying that manages to break through the balance, because think of a balance as an area of like super heavy volume, right? And in that super heavy volume, there's a lot of contracts that were traded in the past that are currently traded, and it's home, right? It's where the market wants to stay realistically. So if you're able to break through that, like to the upside swing, what you have is aggressive buying. Likewise, if you're able to break through it to the downside swing, you have very, very aggressive sell pressure that came in from last week, which is the scenario that we have right now. So my point being is that if you can get a close above 59.15, like to start the week, right, that's when you start to get comfortable. Okay, let's get long, like we're starting to flip because you have super low volume from the prior week realistically. So it's going to be an easy path to at least see like 59.90 area, and then, okay, whatever happens there happens. But that's going to be your bull case, right? Otherwise, your bull case right now is like probably trade the bottom band of this auction, right? Logically thinking, because you have a low auction move from 2 weeks ago. You have the major balance that you're in right now that you've closed within, right? Everything's aligning to continue to sell rallies. But, right, I obviously am a little skeptical of this downside given the large magnitude of market movement that we saw over the last 2 weeks. It's theoretically the wrong thought process and the wrong move to be buying these dips based on these auctions without confirmation that you're actually getting that excelled movement above 59.15, right? It's a higher risk, let's not say wrong, let's say a higher risk play to be trying to buy these dips and play these games where you find prior imbalances than it is to look to sell rallies. So like at the beginning of the week, like I said, my thought process for the S&P, for the NASDAQ is that you're going to want to sell rallies until you get the clean run above 59.15 and on NASDAQ about 520-ish. That is what's going to be the criteria, right? Otherwise, everything that you're buying below that area is going to be some kind of a fade, right? You're going to be counter trend trading and you're trying to buy into these dips where, yes, there probably is going to be some kind of bounces, but it's a lower probability trade, right? I bought some on the S&P last week, not at this low where this volume kind of drops off around that mid 70, but when we accepted back above that mid 80, I did buy some, right? Like guilty, obviously, because I'm looking for, it's a good risk to reward because the potential for a reversal is lower. So if we can get that reversal, it'll run a shitload of stops, which is going to be a very high reward play. But realistically, I'd be extremely cautious at 59.15 on the S&P, right? But I'm going to try to ping some longs to see if we can get that acceptance. And the second we start failing at 59.15 on the SPOOs and at like 520, even like 600 on NASDAQ, just start shorting it. You don't have to live and die by the thought process that this is the reversal, right? Like I think that there's probably going to be a little more of an expansion lower. My estimated momentum move is probably around 5,800 on the S&P before we start catching wind of like more aggressive buy side that tries to come into these prices. Probably a bit lower on the NASDAQ as well, right? But, right, I also need to understand where that reversal is going to be in these markets. So let's take a look at the daily, and then we'll talk about trading into these all-time highs and what I did last week. So, hope you're enjoying the analysis. Oh, praise ye Matthew. I appreciate that. Hey, Laurent. Ryan, what are you guys up to? Just seeing some of the comments right now. If you have any questions, just let me know. I'm not looking at it like the whole time, but like I'll glance. So it's the same thing. Like if I look at the past week's data here on the S&P on an individual day session profile, same concept, right? Nothing really changes. You have a plethora of pretty like heavy Okay, what is this? This is Thursday. You can see Thursday's profile here, right? Thursday's profile in the S&P, the top band is, I don't know, like 20-ish, 60-20-ish. The bottom of that is 58, like 60, I don't know, somewhere there. So anyways, you're getting about like a 60-ish, let's say 70-point move on the day. Look at this profile. This profile is very even, right? There are like very small points at the highs and the lows that are low volume, but it's a very even profile with very thick volume all throughout, right? This is the first session close outside and under the main auction, right? The main auction that was building up last week, like we mentioned here, was like, I don't know, 58, like 90, 85, all the way up to about like 35. The first close below with a very even profile. This even profile is more associated with just like real complete selling, right? Like it's not like panic selling, it's not like aggressive, like very low volume selling. It's just like step by step consistent selling, which this kind of profile mixed with the close below a massive balance indicates that there's most likely more downside, right? And then that's what we got into the end of the week. So into the end of the week, what we get, like on NASDAQ, you have like a B-shaped profile that's shaping up here with heaviness of volume. Now, we're within this balance. You have this like drop off in volume on the larger profile. That's why I like the idea, hey, maybe I can ping along from this area. If I'm going to be looking long to fade on the S&P, it's going to be into this like mid 70, like 58 mid 70, 58.30. Those are going to be the two areas to like fade. If I'm going to be like trying to pick out where the bottom is this week, those are going to be the two areas. Anything under that, right, you get a little more extended. So my best case scenario, right, I'm still long a little from Friday, but best case scenario is we start flying above 59.15, right? That is going to give us the opportunity for these guys to just like open this back up and attempt to climb back into this low volume that was left behind last week. So as I look at it from that perspective, I don't mind being long from lower, right? I'm to the good about like 15 points right now, so like unless we gap down 20 points tonight, like I'll be fine, which would suck, but that's life. And if we start the expansion higher, right, this is the barrier. You look at the individual session profile from Friday that was left. You have the drop-off in volume right where you have the drop-off in volume on the S&P's 200-day profile. Wow, surprise, surprise. Look at this. You get the run under. This is the same area, the intra-balance, 59.12, whatever. Right, maybe we can move it up just a smidge. So you got this like 59.12 area. Like I put these levels manually based on the auctions on my actual tick charts because it's a good visual to understand what the hell I'm looking at and where I am. So you get an expansion lower, right? You hold it twice. It's honestly no-brainer sell. I was just too slow to react, right? My stupidity, not the plans. So anyways, I go do something, right? Come back. End of day, I'm like, listen, if we start moving back above this like mid-80 area, like I'll buy it. It's fine. I'll try to swing it. But in reality, you have the volume balance drop off. If you want to be a like more confident buyer, it's going to be above that like 59.15 area, right? Let's be honest. That's the expansion that you do want to see. That's the expansion that you do want to take note of. So, with that, right, those are my general plans and thought process for this week going ahead. I'm not blindly being like, oh, this is going to be the reversal of the century, right? This is where markets take their massive turn. But I am under the impression that we're either at a bottom, right, or very, very close to one. And that depends on how we close the first few sessions of this week. If we start moving back above these auctions, that's fantastic. That's where I get more confident, and that's where you can play the long side. If you don't want to look at this from the perspective of like, oh, where do I buy this dip? Wait for the expansion back above those areas. Now, if I do want to be a dip buyer, I've got two shots, realistically, on the S&P, and one of those shots is the higher probability shot, which comes in between 58, like 28, and 35. Right, I know it's a wide area, but like let's say like 30. 58.30, that is going to be the point where the buy side would do well to hold the bottom band of this larger auction. If I want to like shoot this thing on the fade higher, which I do, that's going to be the area that I'm going to be looking at. And then more immediately, which is a much lower probability in my opinion, is the mid 70s. So pretty much like almost, I'm long from a little higher, but like you get the drift. So NASDAQ is the same thing. 370, 360 is where I want to shoot the NASDAQ on the long side. I really don't want it to be below that, but I'll probably shoot it at 320 on the long. For me, it's like you get a run above 520, above 600 on NAS, like swing this thing all the way back into highs, right? Otherwise, like you're going to have to sell those rallies. So let's leave it at that. Let's start jumping into the all-time highs trades and breakdown. What I'm going to do for the all-time highs is if we break above 59.15 and go along, where's my stop? So okay, this is if we break above 59.15, I don't blindly get in. I don't breakout trade. I wait for the expansion and prices to pull back. Like it's not gonna just burst above it. Like it'll pull back whether it's on the overnight session or the day session. I'm not blindly buying the break above that area because you don't have the confirmation on a move like that. If you're just buying a breakout, what's the confirmation? For me, it's nothing. So like I don't do that. But yeah. If I take a swing, I'll put like an 8-point stop behind it. It depends on when I take it, where I take it, right? Because if I'm taking it during the RTH, during a day session, I'll probably use like a 3-4 point stop, and if it goes fantastic. But like if I'm swinging it on an overnight, and let's say it's like trading 59.30 on the overnight, and I'm gonna buy like the 12s, probably use like a 7-8 point stop. Let's call it 6. Let's call it a 6 for a swing, 6.5 on a swing. So, all-time highs. If you have any other questions, just let me know. That's a good question. That's like, Paul, that's the way that I trade these things, like rather than a breakout. I don't like breakouts. I'm not good at them. I have a low success rate with them. So, as I'm looking at all-time highs, right? Trading into all-time highs. We had all-time highs last week. Right now, not so much, so it becomes a lot easier to trade, let's be honest. This would have been a greater video for last week maybe, but I had some stuff to do. Anyways, we're doing it now because we're probably going to be trading all-time highs at some point before the end of the year. Now, or Q1. We're going to be trading all-time highs at some point soon. Anyways, so as I'm looking at all-time highs, like I talked about briefly here before when we were talking about the breakdown for the week. Into all-time highs, when a market makes a move into an all-time high, right, when we're looking at these futures, the aspect that you're seeing is that there's no there's no volume, there's no old volume, no historic volume up there. So you got to be trading based on the volume that you're given as prices move into these all-time highs, right? And that volume, for me, is very representative based on the volume profiles, right? A lot of people are looking at all-time highs and looking at like price action or blah, 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 but realistically the imbalances that get created into all-time highs and the balances as well as the volume profiles that get created into all-time highs, they give you an indication and areas to lean on based on weakness and heaviness of volume into those highs that you don't generally see, right? So if there's no volume into an area that's never been traded before, you have to make do with what is actually trading at that point. So like I said, my philosophy around all-time highs is that if we get this like large expansion through a prior high, like we saw last week after the election, we had a very, very strong move that just burst through. I believe the prior high before the election on the S&P was around like 59, like 25 or like 30 or something. It was around there. So election trade, next day, right, just complete upside momentum move through those areas. And what we're left with is this long elongated profile. But the good thing about this profile is that it has information within it. So if I'm trading into all-time highs, my general thought process is that if we move into an all-time high, the best case scenario is for prices to create a balance, right, into that all-time high. When prices create a balance into that all-time high, that tells you that there is strength in the momentum that's been created from this all-time high and, right, a big potential of movement that will continue that momentum to the upside swing. So if I'm thinking about that, I have to establish where the most immediate balances are, right? Where are the most immediate balances into these all-time highs? So if I'm trading into all-time highs, my best friend on any futures is going to be the weekly set, like the weekly individual profile. So every week is denoted by an individual profile because it splits all of the volume into areas, or I guess it condenses, I should say, all of the volume into areas of heaviness of volume versus lightness of volume and everything in between. So if I'm looking at this individual day, right, because one of the worst things that could happen into all-time highs, everyone's like, oh, like, let's start selling all-time highs. Like, it's too expansive. It's too expansive. It's gone up way too much. Like, sell it, sell it. And then it just keeps running higher, right? Or people are like, oh, it's at an all-time high. Let's buy every single high, right? Trying to buy into the high. Okay, well, you don't necessarily want to do either of those things. What you want to do is understand where the balances are so you can have some kind of confidence in the trades that you're taking. So you could have some kind of confidence and understanding of the direction that you're looking at. So if I'm looking at this week over here, I have the top band of the balance where the heaviness of volume starts and drops off, right? That's about this 30 area, right? You have about like 60-30, 60-35 area is the top, and then the bottom band is around like 59-90. So we have that immediate area of all this heaviness of volume that condenses. Another factor is that we have these like few areas of heavy volume over here. Very, very heavy volume around like single prints. And then naturally, right, you have the top band of this auction that creates this balance over here. This one's very easy. But if we're nowhere near that, because that would be like the ideal scenario if we're close to that area for prices to pull back, and then we can just like continue on and blah, blah, blah. But if we're nowhere near that and we're creating a balance into these highs, if I'm trading into an all-time high, I need to know where the current balance is and where that balance has been created. Because that current balance is going to give me a very good understanding of what direction I should take and the momentum for that move. Now, to continue the upside swing based on these balances, I want the bottom band of the balance to hold, right? So I'm a buyer at the bottom band of the balance. That's the simplest way I can trade this all-time high. I want to be very, very kind of like 1 and 0 about it. If I hold bottom band of the balance, I'm long to the top band and ideally higher, because the bottom band of that balance should hold to create to continue the creation of the heaviness of the balance into that all-time high. Because again, remember, the best case scenario into an all-time high is that you create a balance and you continue that move higher. So we want to enforce that and want to see if that is actually going to happen. So as long as 59.90-ish area holds, right, I'm a buyer. Now, I need prices as well to break above that mid-30, 60, 32, 35, and continue that momentum push higher. If we break through that high, what happens is you get this next expansive move higher, but the key is the close, right? The close of a session and the reopen of a session is going to give you the indication that you want to see what the momentum trajectory of the market is. So if we get this, if we're looking at the prior week, right? Not last week, but the week before. If I'm looking at the balance that was created into this high that I've put in this green box, for me, as long as 59.90s areas hold, right, keep buying it. However, if we start continuing the momentum move above that 60.35 area, and we can no longer, right, close above it, what that tells you is that you have an expansive move that fails to accept outside of a balance. What happens in that scenario is when you run outside of a balance, remember a balance is an area of very thick volume. So if that thickness of volume gets disrupted, meaning that price escapes, it's going to take a lot of buying to escape an area of very, very heavy volume. So if that happens, that buy side that escapes better be really, really strong, because it shows its weak hand the second it pulls back into that balance and closes within that area. That is when you fade all-time highs. That is when you sell all-time highs. That is when you look for bearishness. That is the first step to fading an all-time high. Is if you have a balance into an all-time high and you get a failed move higher just to close back inside of that balance, you're a seller into the top of that auction with the anticipation that the bottom of that balance is not going to hold. So we can go from buying 59.90 to selling 60.35 and continuously trying to sell into the 30s, the 30s, the 30s, the 30s, with the anticipation that we're eventually going to break that 59.90, right? Now it works both ways, because if we start moving below that 59.90, 59.85 area, let's say we move 10, 15 points below it and we close back into the balance, I'm a buyer continuously. But in this case, it doesn't happen, right? It doesn't happen in that scenario, so I don't have to flip-flop between this balance. So if I'm looking at what happened, right, under this area, you want to sell rallies. You leave this balance, you want to sell rallies, and that's what happened towards the latter portion of the week. Yeah, you can find some support at 59.55. You can find some support at 59.35. But realistically, the target is going to be, because this is very low volume, right? This isn't the balance. These are just like very heavy volume areas that you can look at for sure. But the main target is going to be down into the major auction, which happens to be 59.10s, 15s into that area, right? So if I'm looking at an all-time high, we'll look at the S&P on an individual basis because it makes a lot more sense from that perspective as well. But this weekly profile is where I'm going to drag a lot of my data from. So, whoops, what's going on? So if I look at last week, right, we had the creation. So like without the weekly profile, I wouldn't really be that confident understanding of where these big balances are. So like I do want to start with that weekly profile, especially if I'm trading in a in an all-time high scenario, right? I want to make sure that I understand where the big balance of that weekly profile is, right? It's a very important factor. So, whoops. So if I'm looking at it, right, I understand that my weekly profile, like we said, is from around here to here, right? That was from 2 weeks ago. So if I look at Sunday, right? Jeez, what's going on? So if I look at Sunday's profile, right, just like on the NASDAQ, we move up, right? That's fine. That's fine. We can continue moving above 60.30. You move above 60.30, great, fantastic. Let's continue this momentum. I don't mind being a continuous buyer. It's fine, whatever. But you don't want to be a blind idiot in terms of where these auctions are, because on Monday we immediately fail back down and we close inside of that balance area. What does that tell you? You're a seller from 60.30s, right? I sold 60.30s, I think only twice last week. I didn't hold it for the largest massive downside move, but you're a seller from that 60.30. You get this failed acceptance, you move back below, and this is how I want to play these auctions, right? I know there's a balance bottom down here. I can be a buyer down here realistically. There's no shame in that. It's fair, but based on this little sequence that happened Sunday, Monday last week, I want to be a seller. So this is the momentum, this is the movement that happens from these all-time highs, right? This is how I'm going to play an all-time high. Understand where the biggest balance is that's been created on the weekly through that all-time high profile, and then continue the momentum. You only fail all-time high momentum when you fail the balances, right, that I showed you. You either break the bottom of the balance or you head fake the top and you move back within the balance. And then eventually, right, you keep selling into these 30s, eventually you do break lower. There's no scenario where, here, let me draw it out. You have to wait like 30 minutes. There's no scenario in this example where we get a move like this that, okay, that's a little exaggerated, but you know what I mean. Like if we get a move that like breaks under the immediate all-time high balance low and then closes back within. There's no move like that last week. Otherwise, we would have been easily buying into these lows. We would have been buying these lows. It wouldn't have been an issue, and then we can start looking for that expansion higher. But that isn't the scenario, right? We didn't see that. Can I erase like all the drawings? So we didn't see that scenario, so that was what pushes us to sell into these all-time highs. A very similar scenario on the NASDAQ here, right? Like you're looking at the NASDAQ, this is on the 11th, right? So me trying to sell on the overnight, me trying to sell on the day session around that like 250 area, 240. Why is that? Right? Like you can see these like larger extended moves to the downside here on the NASDAQ, trying to continuously sell rallies on the NASDAQ to begin the week. Why is that? Is the same scenario. If we understand where we have the big balance here on the NASDAQ, like we just saw in the S&P, we'd be looking for that sell, right? I buy at the bottom of the auctions as long as we hold the current balance that's shaping up. But if there's some kind of discrepancy in that, then everything goes to shit. So if I'm looking at this, right, we have the clear balance top right over here. We can argue that the balance bottom is somewhere here. I was using this area like that. So we can look at this from this perspective on the NASDAQ. This is the balance area, right? From around like 21,100 to about like 21,250. So Sunday, same action. We get a move higher. That's fine. That is completely fine. But if we start failing back below this level, which happened on Monday, sell it. Sell the rallies, which I was doing. We're looking to sell rallies because of the failed acceptance. We can expect 21,100 area to hold as some kind of support structure. Right? It's the bottom of the current immediate all-time high balance. But the second you start closing and moving below, you are a seller. That is how you fade the all-time high. So you get, unlike the S&P, you get a scenario on the NASDAQ on the 12th that gets a head fake and closes back within. What are you doing? Overnight, you're a buyer into the bottom of that balance. And you target 250, you sell from 250 to see the continuation. Eventually, on Thursday, you close below. You have no choice but to continuously sell rallies. So when it comes down to all-time highs, it's imperative that you understand where these balances are, right? It's imperative that you understand where these balances are because you do want to continue looking for the continuation of the balance until it is broken. Otherwise, when you're trading all-time highs, you're going to be like every other schmuck trying to sell rallies like a baboon, right? You're going to try to sell all-time high, keep selling, keep selling, keep selling. This is going to be the easiest way to confirm that the all-time high is continuing or breaking, in my opinion. So, like I was saying, this Wednesday I'm going to be breaking, or going to start to break down all of my A-plus trading strategies, A-plus setups and strategies around the system that are very similar to this. At Trade Pro Academy. So we've got this Black Friday promos going on right now, 60% off, so you can just jump on in. And then our mentorship starts. It's open to all Trade Pro Academy members. It starts in December. We'll all be going live with a full breakdown of the system, going from demo to funded to live, right? And that whole process. So if you have any questions about whatever I've talked about today, just let me know in the chat. While I look for something to drink. So yeah, that's how I trade all-time highs. Yeah, all right. Well, that's it, I guess. I hope you all enjoyed and had a great weekend. Enjoy the rest of the weekend. There's not much left. Let's see what happens on the reopen in about 2 hours' time, or less. And let's start this week off. So thank you, everyone. Thanks for tuning in. And what is mentorship? It's like a live. What I'm going to be doing is a live video recording of my whole trading system, as well as risk management plans and processes to go from like practice trading demo into like a live funded environment. That starts in December. When the market started breaking lower on Friday, where do you I'm not chasing? I assume you been like, where do you say you're not chasing? Or when did I decide to not chase it? This video's on YouTube, Sahar, so it's on YouTube. There's no, like, you can watch it whenever you want. On Friday, when market started breaking lower and I couldn't sell into like 600 or I couldn't sell into 730 on the NASDAQ, like, I just honestly walked away. I just went to the gym. Because I missed those two sells. It seemed like I had to just like put a limit in there without like too much confirmation. And I just left it. I didn't do anything. I just had a long on the spoos on Friday into the close. Bye. Anyways, I'll see you guys. We'll do it again tomorrow. Well, tomorrow I won't be trading, but let's do it again this week, and we'll chat very soon.